You like Huey Lewis on the news?
Hey everyone, welcome back to Milkshakes Markets Madness. You know, Brent, sometimes I feel like this YouTube show is a lot like Seinfeld. Sometimes it's a show about nothing. Although I think we cover a lot, we don't necessarily have a structure or approach. And your idea initially was just very conversational. So it's been a bit of a busy week for us both. We do some small elements of prep, but the conversations are generally candid. This one's going to be very off the cuff as we're both just jumping on to the call right now. Hey, during this week, unless you own Nvidia, there wasn't a lot of excitement going on, but maybe share with me, because I haven't heard the story yet, and share with everyone else what kind of excitement you've had recently, even today.
Today was pretty interesting. First I'll tell you what went on with Nvidia, and then I'll tell you what went on today. So, the market was kind of down early in the week and was feeling a little weak. And, basically the entire market pinned all its hopes and dreams on Nvidia. And you know what? They delivered. It's like, there's a bunch of these memes going around with Atlas holding the world up on its shoulders and, Nvidia across him. And my favorite one was there was a bunch of people sitting in the back of a truck, and one person had their hand sitting on the back of the tailgate, and one person had their hand resting on the handle of the tailgate, and all they had to do was pull that, and everybody would fall out of the back of the truck. And but you know what? Hey, you got to give Nvidia credit. They pulled through. They had a great quarter. They guided higher, and the stock went up $100 overnight. And it was funny because the day of earnings, I tweeted out that a 2-day straddle, which basically means you're buying both the call and the put at the money. And the idea is that you hope that it moves more than the cost of that, both the call and the put. But the put was costing 10%. And I jokingly said that this is ridiculously expensive for a 2-day straddle, but it'll probably end up in the money. And you know what? It did, which is crazy. But this is the world we live in. And so, I actually think that here's my hot take. I think that in the next 2 to 3 weeks, we will see either Nvidia trade in at $1,000 or $500. It's at 780 right now.
Okay.
And it might trade it, but it might trade at both of them.
Yeah, it could. Well,
yeah.
I also saw, another thing that was being passed around was the CEO's email or article from, was it Sun Microsystems back in the day?
Yeah.
And you shared that and mentioned that, I think, when this hype was just kicking off last year, when they first beat earnings and price started taking off. So you want to talk about that a little bit?
Yeah, we referenced that. I would encourage everybody. I think we talked about it back in November, but if you didn't do it then, do it now. Go to Google, type in Sun Microsystems, Scott McNealy letter to investors, or something to that effect. And it was back in the early 2000s, and Scott McNealy basically said, and I'm just going to make up the numbers off the top of my head because I don't remember what they are, but he basically said, to justify the price earnings ratio that you were putting on my stock, I would have to, 10x my sales every year for the next 10 years. I would have to pay no taxes. I would have to pay no salaries. I would have to pay. And he basically just went on this whole litany of ridiculous expectations that would have to happen to justify the stock price. And he basically ended it saying, what were you thinking? And that's kind of where Nvidia is now. And again, this is a wave, and we're riding the wave higher. But at some point, this wave will end, and when it ends, those same articles will be written by the same or in very similar fashion that happened with Scott McNealy. And I know there's people that are hearing me saying this right now, saying, "Oh, Brent, you just don't get it. It's different this time. This is a whole new world." And so what I would encourage you to do is not only go look up the Scott McNealy quote that I just suffered, but look up a company called Razorfish from the dot-com boom. And their CEO did an interview with, I think, 60 Minutes or 2020 or one of these talk shows, kind of in the February, March 2020 timeframe. And listen to how arrogantly he said it's different this time. And then look and see what the stock price of Razorfish did over the next 2 years. So anyway, does that mean, and I should say, listen, I believe in AI. I think Nvidia is a great company, but the valuations are getting a bit silly. And once you get into silly territory, They can get even sillier.
Territory.
Is that a word? Is that a
It
word?
is now.
Silly territory.
Silly territory.
Nothing to say that it can't get sillier. I think I can't remember if we talked about this or not. I know I tweeted about it a little bit. I had actually said it had gotten to the point where it was worth taking a shot on some Nvidia puts. And so a couple weeks ago, I posted that I had bought the 650 strike puts for both March 1st and March 15th. Thankfully, I sold those the day before earnings because I rolled them down to the 600. So I locked in a profit, made money, and spent a lot less. But I bought some 600s that now expire March 1st and March 15th. And so that was, luckily I did that because, again, the next day the stock went up $100. I actually bought a few more on Friday when it was trading around 720. Or no, so I'm sorry, it was trading around 820. It ended up closing the day at 787. So anyway, we'll see what happens. It's a crazy world. Oh, speaking of crazy though, you mentioned excitement from today. So we were
Hold on, I want to say one thing really quick before you pivot.
Yeah. Okay.
The interesting thing too, maybe you'll have some more color to add here, is with the Sun Microsystems. I know it's a brave new world, and the monetary base is larger, and all these different factors. But I think at the time it was 10 times earnings, the price, the PE ratio was, and now Nvidia is 40 times.
Yes, it's basically Nvidia makes all those statistics that we talked about. Sun Microsystems, Nvidia has surpassed those at this point. And the other thing that's important to point out about that is, and when people were saying, "Listen, this internet thing, this changes the world," it did change the world, and they were right. But sometimes valuations just get crazy. And so they were right that the internet changed the world, but they were wrong about the price to earnings ratio that was appropriate for Sun Microsystems. That could be the same thing for an Nvidia here.
Well, I'll have more to add there in a minute, but I want to get into the craziness of your personal life. It seems more fun.
So today, we were on the other side. So I live in San Juan, which is on the northeast side of Puerto Rico, and we had a volleyball event on the southwest side of Puerto Rico today. Pretty close to where Cuppy lives, just south of Cuppy. We went to Mayaguez, and so we did volleyball day. And on the way home, I jokingly said, we were leaving, and I jokingly said to a couple of the other parents, "I'll race you, going home." Well, of course, that even though I was halfway joking, I was halfway serious. So of course we're just coming into Ponce, which is kind of it's the big city on the south side of the island, and I'm going pretty fast, and I come around a corner, and the cops were there, and I even said to my son Moses, I said, "Oh boy," I said we may be getting pulled over here. Just we'll see in a minute. And he said, "Really?" And I was like, "Yeah." So we're driving, and sure enough, a minute later here they come up behind us. Lights are flashing, and I'm like, "Oh, here we go." I just know how this is going to go because I don't speak Spanish, right? And so we pull over. And it's funny, like in the U.S., they come up on the left side of your car. So I'm sitting here looking at the rear view mirror on the left side, waiting for the guy, and he's standing back there. And then I look over, and the guy, he's like right there on the passenger side window, just like this. Okay, so then I roll down the window, and of course he starts speaking to me 100 miles an hour in Spanish, and he's obviously not happy. I was going pretty fast, and of course I start off with the "No hablas español," and you can just see he's not happy. And my son can speak it a little bit, and so my son is kind of half translating, but this guy, he's speaking so fast, and we figure out that he wants my driver's license and the registration. So, but I have a Puerto Rican driver's license, so I hand him my Puerto Rican driver's license, and he basically says, we understood this part. He's like, "So you don't know hablas español, but you live, donde in Puerto Rico, because I got the Puerto Rican," and I basically said, "Yeah." And he's just like, he's not happy. So then we give him the registration, like that, and so this was the funny part. So I knew I was getting a ticket, right? So then he goes back to his car. He comes back and he hands us. He says, "Okay," and he has this big. He basically gives me a ticket and hands me my driver's license back, and we start driving off. And again, my son's pretty good with Spanish. I mean, I'm not, but he's pretty decent. So I said, "Tell me," I said, "What is it and how much am I going to owe?" And he says, "Oh, it's not too bad. You're going to owe $55." I'm like, okay, that kind of sucks, but I can live with that. So then I get home and I finally have the chance to look at the ticket myself. And it was not a ticket for $55. It was a ticket because I was going 75 in the 55.
55.
And that's not even, and actually, to be honest, I think I was going more than 75. I think he was actually being kind. Anyway, and it wasn't a $55 ticket. It was a $280 ticket. So I guess, and so I sent it to some of my friends from Puerto Rico, and they said, now you're a Puerto Rican.
They said, don't frame it and put it on your desk.
Yeah, exactly. So anyway, so that was kind of the excitement for the day.
Right on. Well, look, let's circle back to markets a little bit here, because one of the things that's interesting, you might like to speed in your car, but you're certainly not one to take that approach in markets. And one of the things I think people frequently get wrong, we frequently circle back to here in this conversation, is you might, disagree with the sentiment of markets. You might think Nvidia is over its skis, but you don't push against that trend. You might take these little positions, a put here and there, but generally you're riding this wave. Now, you're not really hooked to the hitch of the tech wave, but you are generally going, up and to the right, as long as the market's going up and to the right.
Yeah. So, I mean, we own, and the reality is we own Nvidia. I own the Nvidia stock for clients who are allocated to equities and have technology exposure. Then we own it. How you can't have exposure to technology and not have Nvidia, right? But the puts were bought as a hedge against that exposure that we already have. Again, I'm not saying that everybody should be short this market here. It's really hard to be short this market. And listen, somebody will time it perfectly and they will buy puts on the exact day, or they will short it on the exact day, and they'll make a bunch of money. But people who have been doing that for the last 6 to 9 months have gotten killed, right? And so,
yeah,
what I do know is I don't know when this is going to turn, but what I do know is I cannot be in this type of a market without some kind of downside protection. And whether that's cash on the sidelines, whether it's a bond allocation, whether it's puts, I think everybody has to kind of determine that for themselves. But things like this don't go on forever. And listen, if they do keep going on, well, then we'll ride the wave and we'll trail everybody else, but we'll still make money. And at some point when it turns down, then maybe we'll put a little bit more, foot on the gas. But as of right now, I've got my foot 1 inch from the brake.
So Brent, do you think, I think you have a different type of history. You've worked, were you Credit Suisse originally?
I started with a company called Donaldson, Lufkin and Jenrette, which was kind of a mid-sized boutique investment bank in New York. Credit Suisse bought them at the top of the market in the dot-com boom. I think Credit Suisse paid $13 billion for him, and if Credit Suisse realized more than $1 billion of value, I would be shocked. So I do have a little bit of experience with buying things that are overpriced.
So through that process, I think you kind of have an appreciation working with very seasoned investors at Credit Suisse, especially more on that institutional side of things. Where do you think, I think a lot of people, when they're managing, whether it's just client assets or they're just trying to make general investment decisions, don't necessarily have the sophistication per se. And I'm not, trying to take shots at anybody who's in this game. We're all at different levels, but do they perhaps lack some of that sophistication to put appropriate hedges on, and instead they're trying to time markets?
Yeah, probably so. And that's the thing is that, and I try to be careful about this, but I hear people make this. They'll read something on paper and they'll say, Druckenmiller is bullish on whatever it is, and they think that Druckenmiller is 100% in that one thing, and that's his entire portfolio, and that's of course not the case. And the biggest mistake that I see, let's just say unsophisticated or less sophisticated investors, is for a portfolio manager, like for a professional portfolio manager, a 5 to 10% position is a very big position. Like very big. Like most portfolio managers don't have positions that big, but I will routinely talk to retail investors who have 15, 20, 25% of their portfolio in one thing. And listen, if you really believe in it and you've really done your homework and you are willing to take the risk, I don't have a problem with it, but that is not, if you don't know that position better than everybody else, you should not have a 20 or 25% position in anything. And so, to me, that's where either the inexperience of lack of sophistication comes in. I'll give you another good example of to your point is, you can't just go out and buy puts either, because the day before or the day of Nvidia earnings, if you were buying puts that day, the VIX was very high and the implied vol on buying these options was very high. The premium paid for options was very high. And so there were some people that very possibly bought Nvidia calls. And then even though it went up $100 the next day, the calls that they bought may not have gone into the money because they paid so much for them. And the next day, when everything was rallying, the VIX dropped, I don't know, 5 to 10%. And so those options prices were in general a lot less cheap. So I'm not saying that people didn't make money on it, but that's an example where you could buy a position, like an option position, you could get it directionally correct and still lose money because the price you paid for them was too high. And again, that's kind of my point on Nvidia. Saying that Nvidia is going to go down is not to say that Nvidia is a horrible company, or that they don't have incredible growth potential, or that they don't have a fantastic CEO, or that they don't have a great pipeline. They might have all of that stuff, but at some point things just become too expensive. And so you have to be very careful of what you're paying for something. And that's one thing that I would say that perhaps the less sophisticated don't understand that the more sophisticated do. Having said all that, John, what I found out in the 2008 global financial crisis, and even 2008, 2009, was that even these so-called sophisticated investors really didn't know what the hell was going on either. And so there's a lot of that, where people will, they think that because they have a job on Wall Street that they know everything, and they think that because they rode a 40-year wave of interest rates going from 20% to zero, that they're fixed income experts, right? And in some cases, maybe they are, but in some cases, maybe they were just riding that wave, right? And when you get into this new environment, maybe they don't know what's going on. It's that type of stuff that really kind of opened my eyes in 2008 and 2009, is when these so-called masters of the universe that I looked up to and that I kind of wanted to become, when I realized that they didn't know what the hell was going on, that was a real eye opener for me. And that kind of set me off on my journey of self-discovery to figure out how things work, because before then I probably just listened to who I thought was a sophisticated, smart investor, memorized whatever they told me, and then started either saying and doing the same thing. And and at that point I'd been in my job for 8 or 9 years at that point, and I'd probably, in hindsight, had just been going through the motions. So anyway, I don't know how I got on that topic, but but there's definitely a case where the both sophisticated and unsophisticated just make mistakes, that because they think they know one thing and the world really works a different.
Well, I don't necessarily believe this is the case, but imagine in the late 80s, we're having a conversation like this, the same around the bond market, the same way we're having the conversation around tech and Nvidia. No one would have known that you would have gone on a 30-year bond market tear all the way down to 100 basis points, 40 basis points on the 10-year bond. And now here we are. I don't think this is true, but I'm just saying, as a thought experiment, this could be the beginning of a 20, 30-year tech ride, where this is just the beginning of Nvidia. We never know where we are in any of this. And certainly that's why risk management is important. One of the things that I'd like to get your thoughts on.
Real quick, before you move on from that one, I'd say, Raul has this theory. He calls it the exponential age, and I don't necessarily agree with with all of his points on it, but I agree with the larger thesis that we are moving into a more technological world, and that we will take it will be a step function. Whereas we have this right now, and 5 years from now, it could look dramatically different. And I do think that's the way that we're headed. And so I largely agree. And so I think AI is going to be huge. And I think a lot of people are going to miss out on it. I've mentioned this is part of the reason why I have said so far, I have said, if we get a correction, I think it's one that you buy. And I should also say, as ridiculous as, you look around the world and you see these kind of ridiculous things, whether it's Nvidia's price or the sentiment, or, the politicians doing this or the whatever doing that, like, your neighbors are doing. I think it's going to get even crazier. And, I sent out one of my favorite tweets the other day is that, I said people are losing their minds, and it's because they are. Like the bulls are losing their minds, the bears are losing their minds, the Republicans are losing theirs, the Democrats are losing theirs. It's just, it's really something to see. And the scary thing for me is that I think it's going to get even crazier. So I guess this is a long way of saying it. If you're already like tapped out emotionally, I mean, good luck, because I think it's going to get, I think it's going to get dialed up to 11.
Well, that's why I thoroughly enjoy a good single malt Isla Scotch. Helps me get through the crazy times. Speaking of this narrative of the exponential age, one of the things that I would add to that too is sometimes these are, it's like the dollar milkshake theory. It's a cute wrapper, and then people don't take enough time to really look underneath of it. And I think that's what happens oftentimes with the way Raul tells stories. And I think with the exponential age, it can, people can get very lazy with that thought experiment and just start throwing money at random things without any, real hedge or sophistication in how they're approaching that. So it's a similar vein in what we've been talking about. And back to this sophisticated, unsophisticated, accredited, and non-accredited, we're not using that term to slight anybody. I mean, it's just kind of a market description or characterization of those with, certain net worths, or those who have, a certain level of experience. But for those who don't have, let's put it this way, their entire day to focus on markets. And we're talking about things that are maybe a little more sophisticated when it comes to a hedge, out of the money options, or however you want to, try to hedge something like a one-day event, like an Nvidia earnings call. You did kind of graze over this idea of like, hey, well, if your defensive hedge is owning bonds, can you add a little color to that? Because we have talked about a number of times the benefit of right now, where interest rates being where they are, you're getting paid to wait. But there's also this uncertainty when you look, people have made frequent comparisons that this is the 70s. And as much as Powell doesn't want to have that legacy, we might see double dip inflation. And as great it is as it is to get 5%, it doesn't really help you if you're, in a long bond for 5 or 10 years and bonds go to 8 or 10%.
Yeah. So, I think I know a lot of people who think that interest rates are going to go back to zero for deflationary reasons. And listen, I completely understand that argument, and I think that could very well happen. But I don't know, so I'm not playing it. And what I am doing is I'm keeping money. When I say bonds, I've got short-term bonds or T-bills, and they pay 5%. So I get paid a pretty decent return to just sit on the sidelines and wait. So if those people are right, that interest rates are going to go to zero and we're going to have this big deflationary move and asset prices are going to come down a lot, then I can use those T-bills to go buy things at really low prices. So that's how I have decided to play it. And the other thing is I think we could have another surge in inflation. Again, this is an area, sometimes you don't have to know everything, right? And it's if you don't know, just knowing that you don't know can help keep you from getting in trouble. And because I don't have enough conviction one way or the other on the long end, I've just decided not to play it. But I could see with getting a secondary surge of inflation, and combined with the U.S. government budget plans, that I could see yields at 6 or 7% on the 10-year. That wouldn't surprise me at all. And by the way, if that happened, that would be extremely good for the dollar. So, I think one thing to think about is if you don't know something, that's okay. You don't have to know everything to be a good investor. Again, just being really, the most important thing with being a good investor is just being really honest with yourself. Are you good at this or are you not good at this? Do you know what you're talking about or do you not know what you're talking about? Kind of along the same line, this kind of goes in with what we were just talking a second ago about sophisticated versus unsophisticated. Because I talk about the dollar and gold and currencies a lot of times I'm interacting with people on Twitter or social media or go to conferences, and they will start talking about, either, what if the world went to gold, or what if the world started using Bitcoin, or what if they started using another form of, payment system rather than the US dollar. And one of the points I try to get by to them is you as an individual, sure, you as an individual can use Bitcoin and you can send money to Australia and you can go to El Salvador and use your Bitcoin wallet to buy something. But for the whole world to start doing this at a corporate level, The people that think that that can just happen have never sat on an investment committee. They have never had to deal with compliance. They have never had to deal with a board of directors. And all of these people that anytime you try to do something new, automatically tell you, no, you cannot do that because of the risk involved. And so, this idea that the world is just going to wake up tomorrow and stop using the dollar and start using some BRICS currency or start using, Bitcoin. And again, I'm not saying it can't happen, but it's a much different process to happen at a corporate and a very large country level than it is you as an individual. So to really understand what's going to happen and how it's going to happen, you really have to get out of your own chair. Get out of your chair and go sit in somebody else's seat, look at the world from their view, but then you can't just go look at it from their view with your own mindset. You have to think like these people. Now, do you think the Fortune 500 CEO wants to stop using dollars and wants to start using Bitcoin? He probably doesn't. Now, I'm not saying there's not a CEO out there somewhere who isn't open to the idea. But again, and even if that guy does want to do it, he's got to get it past his CFO. He's got to get it past his risk committee. He's got to get it past his board of directors. These things take a lot of time and a lot of effort. And most people are not willing to take the risk to do something like that, because unless everybody else does it as well, it fails. And so that is also, I think, where experience comes into play. And if you've actually lived overseas, if you've actually worked overseas, if you've actually done a transaction overseas and not just read about it in a book, like actually did it, it's a much different world than a lot of times is painted on, a Twitter or blog post or whatever it is.
Yeah. Another ways I'll frame that is oftentimes I think about, we've kind of had this big wave of tech disruption over the last 2 decades, and we'll continue to have it. One of the reasons is, and even we're seeing some really interesting stuff happen with Google. The potential, if you just 2 years ago, not even a year and a half ago, suggested that there might be some competitor that would come in and disrupt Google's dominance in the search world, it seemed impossible. But now with ChatGPT and some of the other AI that's coming out, and now Google just released a couple of days ago their AI Gemini. It was a complete disaster. And so you can kind of see how very quickly, the reigning leader, the hegemon in tech, can suddenly get displaced. And one of the main reasons, especially in these big organizations where there's a lot of bureaucracy, is a lot of times the CEO's job, or at least the way that they approach it, is simply to not screw up. Right. And once you get into that mindset, you're no longer taking the risk sufficient to continue to grow. And that's when some smooth talking, risk taking youngster with a great idea comes in and suddenly knocks you out of the throne. And so it's similar with these countries. If you're living in a system as flawed as it is, but is keeping you in power, keeping you rich, you're not going to suddenly just destroy it.
No, that's exactly right. And I absolutely know that there's somebody out there listening to this and saying, well, that's the same with the U.S. and the U.S. dollar. It doesn't have to be somebody else does something. It has to be that the U.S. has to screw up. Well, and the U.S. is trying very hard to screw everything up. I agree with that. But again, there's just, in my opinion, there's just no place else to go right now. But it's also why it will eventually happen. In everything cycles. We've talked several times that nothing lasts forever. Fiat currency doesn't last forever. We will eventually get into a situation where the dollar will fall, gold will rise, and we will have some kind of a new currency system come into play. But it doesn't mean that it has to happen tomorrow, and it might not happen again. And I largely think this will happen because people will screw up and make mistakes, not because somebody does something smart and succeeds.
Right. And it's, if you're going to go hide in a cave waiting for the end of the world to come and pass, you might end up just starving in that cave. And that seems to be, the case for a lot of people. You gotta have this balance, Brent, which you talk about a lot, which is go with the flow, but also be prepared in case something surprising comes along. And that's been your mantra the last couple of episodes is be prepared. So look, we'll leave it there. One quick note for everybody. If you hadn't noticed, I'm rocking one of our t-shirts. Oh, yeah.
Keep calm and Hegemon.
Keep calm and Hegemon. So feel free to go to store.milkshakespod.com to check that out. I'll have a link. Brent's shirt is in the mail, so he'll get that soon enough. We've been getting comments. Different people have been wearing them. Some people have been wearing them to conferences, and so that's all good fun. Brent, any last words before we kick out here? I mean, it was a relatively quiet week outside of Nvidia. What are you looking for next week, which is equally quiet, except for, I guess we could say, the PCE and a bunch of Fed speakers?
Yeah, I think I've said this before, but I think this idea that we're just going to have a full year of the VIX at 12 or 13 is just wrong. I'm looking for some action in the VIX. I think the next month is going to be pretty exciting. And I don't know if this is some kind of a cue or not, but for the last 5 minutes, my computer has been beeping. I don't know if you can hear it in the background, but I'm waiting for it to blow up here. So I think we got to end this call before, we have an on-air accident.
Before everything self-destructs. All right. Well, everybody, we appreciate you. Find Brent on Twitter. Engage with him there. If you don't know already, it's his second home. You can find me there at John Kutsmeda. You can find this show on YouTube and on Twitter with Milkshakes Pod. We'll look forward to seeing everybody next week. Thank you very much. This show is provided for entertainment and informational purposes only. It should not be relied upon as legal, business, investment, or tax advice. Neither the hosts, guests, nor any funds they may manage intends to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies.